Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 77 quarter as key support, and the market tested below it by just 2 ticks, and then put in a directional move to the upside, pushing to a new all-time high. We knew that the market had contracted in volatility and range, and we were looking for a directional move outside of the recent 2-day range. And so far, that move has been to the upside, which is in alignment with the overall trend. So now heading into the day, we're going to be looking for some continuation to the upside. We're going to use 77.75 to 79.75 as key support. And as long as the market holds above this support zone, there's still potential to make yet another all-time high. Now, if the market is really strong, then we should not really even pull back to the initial support zone. And ideally, we should hold above 1982 and then put in a continuation move up towards 90.5 to 92.5. We also have to keep in mind that there is no hard resistance at these upper zones. The market is trading at all-time highs and setting fresh all-time highs as it goes along. So there is no hard resistance, and the zones and levels that we have up here are really just based on volatility and the type of range that we can expect on the day time frame. So for today, our bias is going to be bullish as long as we hold above 77.75 to 79.75. And again, ideally, we don't even pull back there, but if we do, then that is the key inflection point. And in the event that that zone breaks, that could actually trigger a long liquidation move down to 69.5 to 71.5, and potentially 65.75 to 67.75. And then we can expect responsive buyers to be active at the support zones below, especially on first test, with this 65.75 to 67.75 being a very key support zone in this overall balance. But as long as we hold above initial support, our bias is to the upside, and we are going to be focused more on trading on the long side. We're going to be cautious on any shorts. As the market's making new highs, I don't think it really makes sense to enter short positions because, again, there is no hard resistance, and the market could go up to 90.5 to 92.5 quite easily, and even push up towards the 95, 96 area. So off the open today and heading into the first hour, we're just going to be watching the market to see if it can maintain the strength that it has developed in the overnight session, and whether it can put in a continuation move and then trend to the upside. And it doesn't have to put in necessarily a big trend day, but given how strong the overnight session has been, there is a pretty good chance that we'll get a trend morning. So we could get a directional push in the first couple of hours, and then perhaps we hit some higher prices, and then the market starts balancing and doesn't really continue just rallying into the close. So keep that idea in mind. And really the key zone that we're going to be focused on is 77.75 to 79.75. Again, if the market is strong, then we should not come back there. But if we do, it's very important that the market hold above that zone. And if it doesn't, then we'll have to flip our bias and look for a short setup, because below this zone we could get liquidation, and it'd be quite easy for the market to liquidate about 10 points below initial support. So that's the secondary scenario in the event that buyers can't continue to hold the market higher and push it higher. But by default, our bias is going to be to the upside, and we are going to be more focused on long setups until the sellers really press and the market tips its hand and shows us that it's breaking below initial support. So those are the main thoughts heading into the day. Let's see how well the buy side holds it up this morning and take it from there.